Let's move on to Nigeria. The Nigerian market has been moving higher recently, but today we saw a change in the direction. The NSE All Share Index closing at 33,207 points. It fell back just under 0.5%. The pressure really came from the profit taking we're seeing in Oando. Oando fell almost 10% today to 16 naira 70 kobo after running up quite a bit over the last few sessions. Let's now cross to Stanbic IBTC, where Efe Omoduemuke, a fund manager, is standing by to give us some thoughts on the market. Efe, thank you for joining us. And I want to start by hearing your thoughts about this market trend. We got a sense that it was about to start going again, but today we did see it fall back about 0.5%. On the back of profit taking in the likes of Oando, we did see Transco also fall back 5%. Your thoughts on how the market traded today?
Okay, yes, as you have rightly pointed out, the market dropped today, but we don't think that it's a negative sign. What we believe is happening is investors just trying to grab a bit of profit, and we expect to still see some volatility going forward until we end this earnings season. Remember that results of companies should have been out by now, but one reason or the other they have been delayed. So you will find investors being a little pessimistic, and then they will want to just grab as much as they can before the results start coming in. So we think it's a normal trend. It's expected to happen, and it will slow down going forward.
The retail investors are widely expected to start coming to the market. In fact, to some extent they are back, but to what extent are you seeing them buy mutual funds? We know that mutual fund industry is still somewhat small when you look at the broader market in terms of activity. But since you manage a mutual fund, I want to hear from you to what extent we are seeing retail investors coming to buy mutual funds now.
Okay, I think that a couple of things. Number one, the Securities and Exchange Commission has embarked on some tactics to bring in investors into the collective investment scheme, and we have seen that pay off a bit. So we see good inflows into mutual funds, and considering the trend of the market, this should be a time where investors should participate more with mutual funds. And when you look at what mutual funds are supposed to do, for example, Stanbic IBTC mutual funds offer investors a unique and effective blend of both technical and fundamental plays in the market, and these are what investors, unsubscribed investors, should tap into and try to benefit from.
But are you seeing more demand? Are you seeing more demand for this at this point?
Yes, but it can be better. It can be better.
Okay, so it's still somewhat moderate at this point. Okay, let's move on to the markets. I want to come back to the consumer stocks. They've grabbed the headlines recently, especially as earnings season started with the likes of Nestle, Guinness Nigeria releasing numbers. A lot of people calling those stocks expensive, Efe, and I want to hear your thoughts about that, how you're allocating to that sector. Are you still overweighting consumer goods companies right now?
Okay, I think we have been fairly weighted on the FMCG space, and the reason is, yes, you would find some securities being expensive at the moment, but the truth is, for that space, investors should focus more on security selection and security rotation. So within this space, we believe that there are still some good names that will offer decent upside. So we don't think that you should sell off. We think that you should just be moderately weighted, and that's the trend that we think should be adopted.
All right, Oando fell back today, like I mentioned earlier, almost 10%. Is that a company you like for your portfolio right now? It seems to be the natural play if you want to get exposure to the petroleum marketing stock sector.
Because of its liquidity, yes, it's good to have in your portfolio, but I think that investors should still be a little bit cautious. Yes, you can go into Oando, but at decent weightings, and depending on the risk appetite of your portfolio, you might want to either moderate it upwards or downwards. But I think Oando would offer decent upsides in the coming quarter.
All right, we just saw the results of the Debt Management Office auction. We saw some yields go up on the 5 and the 10-year paper, and given the decline we've seen in yields across the board recently, at least since the beginning of this year, I want to get your thoughts on how you're allocating to fixed income now. Is fixed income are you still as heavily weighted as you were earlier in the year in fixed income, or are you more into equities right now?
Okay, for the fixed income market, we are not definitely going to be as heavily weighted as we were beginning of the year in light of yields dropping, because we would see more returns coming from the equity play. So we are more weighted in equities for the equity mutual funds. We also have mutual funds that are strictly into fixed income, and those ones will remain in fixed income.
Yeah, of course, I'm referring to your balanced funds, funds that have both fixed income and equity. At the beginning of the year, it did make sense to buy equities, but this market is up almost 20%. I'm talking about the equity market now. So is it still a strong fundamental play, moving aggressively into equities at this stage?
Yes, I think equities are still quite better than fixed income plays at this moment. And the reason is, I think that the yields in the fixed income market might still continue to drop, or they will flatten out. But for the equities market, it's on a bullish run. After the earnings season, we still expect that companies will still offer decent returns for investors, and investors naturally should be more heavily weighted in equities as opposed to fixed income until the trend reverses.
You know, since companies are going to be declaring dividends, dividends, of course, is cash, just like you will get a coupon payment in fixed income. Is that something that you look at when you're making your decisions as to which stocks to buy, especially in an earnings season like this? Or are you more focused on the longer-term value, the longer-term capital appreciation that we could see in those stocks? Because at this point, like you mentioned rightly, yields seem to be coming down in the fixed income space. Okay.
Basically, we are fundamental long-term players. We are not short-term players. And when we analyze stocks or securities to buy, we focus more on the long-term fundamentals of the companies as opposed to what you get in the short term. Yes, dividend plays are good, but they are not sustainable, because if company prices begin to rally, then the dividend yield definitely will drop. And if you focus only on dividend yields compared to fixed income yields, some securities might not be as attractive as just pure fixed income play. So it's a combination of a lot of factors that we look at.